What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Spirit Airlines, ticker symbol SAVE, on a variety of time frames in anticipation of tomorrow's trading day, Tuesday, January 30th. Well, SAVE stock here today down about 3.5% compared to the recent volatility. Not an incredibly volatile day for most names. That would be a huge day, but for SAVE here, a relatively modest day, whether it's green or red, to be honest. We had a slight fade here heading into the close, reclaimed a little bit, some consolidation through the after hours. Let's take a look here at the 5-minute and get some volume context. Zoom in a little bit and look at just today. Now, here with the volume, really what I'm looking for, you'll notice a trend on most stocks that we take a look at. I'm always kind of looking for one thing when it comes to volume. I want to see massive, as much volume as possible on moves that confirm my bias, for lack of a better term, and as little volume as possible on moves that go against my current sentiment. So for example, if I'm long on a stock, I want to see upside moves, and this goes for really any time frame, to be fair. I want to see upside moves on huge volume as much as possible, and I want to see downside pullbacks or fades on as little volume as possible. Why? Bigger sample size of market participants confirming my bias. And when the stock is going against me, this goes for whether you're long or short, by the way, when the stock is going against me, I want that move to be occurring with a tiny sample size of the market that can immediately be taken over when the volume comes back in. You'll notice this is a very common strategy utilized for dip buying from institutions and funds on stocks that they are bullish on. So looking here at SAVE, I wish this were more obviously, like for the bulls, for example, I wish we had really, really big volume midday as we grinded higher, right off the open when you only have 2 candles immediately off the open that are green. It's pretty common that you'll see big volume off the open. Of course, midday, it's expecting a lot to see massive volume midday, but we got some nice spikes in there. But looking here toward the end of the day, this kind of fade into the close. We did see some elevated volume. Of course, that last candle got the biggest volume, the most volume, I should say. And that ended up being, the bulls slightly winning that candle. We actually had some good bullish volume here immediately after the close. And listen, we're getting nitpicky here, but for these 3 candles with pretty big volume, I think the bears would look at that and be relatively happy. But again, this is just one of many factors to look at that we're always looking at here when we go through the different time frames. Let's zoom out here to the 30-minute here on a SAVE stock to get some more context on the self-fulfilling prophecies that are the 200 period and the 50 period. Of course, probably the 2 most commonly watched technical indicators on all time frames, especially the daily, the 4-hour, and the 30-minute, and I want as many eyeballs on these things as possible. So here, the 50 period is the most relevant as of right now, currently just below that, actually treating that as kind of a resistance area, downside trending resistance area today. Now, what I'm looking for here tomorrow on the 30-minute, remember, I'm always looking at multiple time frames, trying to get as much lining up with my sentiment as possible on as many time frames as possible. Tomorrow, I'm looking at that 50 period. And if I'm a bull, I like to give both perspectives here. If I'm a bull, I want to see that thing break upside and hold. Okay, I just want to get back above that 50 period like we have been a couple of times this week. However, it's really been after hours in pre-market. I want to see that thing break and hold in regular trading hours with high volume. If you're a bear, you want this thing to keep rejecting downside, push it down below $6 a share. That's a psychological level that was acting somewhat as a support in the last couple of days. And that's really all here for the 30-minute. Now let's zoom out here to the 4-hour. You can see that 50 period trending downside, currently sitting right at about 720. Now the fact that it's trending downside, guys, don't look at that as any indication of future price movement. You have to understand, these are lagging indicators. The only reason I utilize them at all is not because I think they're going to predict future movement, but because the reason you see higher volume when the stock is trading around heavily watched indicators like the 50 period, like the 200 period on highly watched time frames, right, is because they are self-fulfilling prophecies. You have traders, investors, funds, institutions, algorithms being programmed to do so, all trading and making decisions around those levels. So here on the 4-hour, not really a ton to look at, of course, except for that $6 area that becomes even more obvious here on the 4-hour. Looking at that, I would prefer to see that hold from a bullish perspective for the next couple of days. That 50 period moving downside sitting currently around 720. So understand that, that still is kind of a 15-16% move away. But something I'm considering here in the near future, we have seen a lot of volatile movement on save, so that's certainly, not out of the cards. That's in play right now. So, both the bulls and the bears could see that 50 period on the 4-hour as a positive. From a bullish perspective, understand, you're over a point away. That's a 15-16% move. That's a pretty big move before you run into any potential ceiling, any potential hang up. At least from a technical perspective. And from the bears, you could see that act just as that, a hesitant level. More so the stock is hesitant coming into that level as it is expected psychologically to act as a potential resistance level. So moving forward here on the 4-hour, again, it's kind of a move away from a bullish perspective. Hold 6, try to make our way up to that 50 period from a bearish perspective. If we do make our way back up to that 50 period, reject off of it. And that thing could help push down below $6. That's what you're thinking if you're a bear. And by the way, it's important to understand the psychology of both sides of the ball, so to speak. No matter what your sentiment or bias is, it'll help you make better decisions and understand your play and your position better. I know it doesn't feel good if you're bearish to consider the bullish side, or if you're bullish to consider the bearish side. I know it doesn't feel good. It's uncomfortable. And that's why most people won't always consider both sides. So if you're able to get over that hump and do so, puts you in a much, much better position. Just understand it, look at both sides, understand the psychology, and then reinforce your bias using that. All right, let's zoom out here to the daily. This is kind of the granddaddy of all the charts. Now, understand, the 200-day moving average and the 50-day moving average here on the daily chart, those things are way up there. Now, on the daily chart, things take, like moving averages in particular, they take time to move. Okay, this is going to be the slowest chart for these two indicators. Well, at least that we're looking at. But honestly, guys, from a bearish perspective, that doesn't really help you, because the next very obvious technical area, aside from like 830, 840, which here you can see has been respected on both sides of the ball, so to speak, that is kind of a technical level that I'm paying attention to. If you're a bear, that next area is up at $13. This is like the inverted issue of having massive pumps where you're kind of floating on air when you have big pumps to the upside, because the moving averages, there's no technical levels that are getting sucked up to kind of help you out as a potential safety net. This is a similar situation with big moves to the downside. If you're a bear, there's not really a whole heck of a lot from a psychological perspective stopping a potential big rebound to the upside. So if you are a bear, really you're looking at $6 and just hoping to get down beneath that and hold, ideally retest and then fade off. But if you're a bull, hold $6. I don't care if we bounce off it 17 times. Just hold it in, tomorrow, the next few trading days, the next couple of weeks, really. And then you kind of have that open sky setup. If we can get some kind of catalyst, that's the if always. Get some kind of catalyst, get some interest. We have earnings coming up here on February 8th before the market opens. And then you're kind of looking at 830, 840 as a potential area of resistance. And from there, you have open sky. That's one of the benefits of this, all the way up to kind of 1310, at least as of right now. Let's finish out here by taking a look at the options chain, see how the options traders are looking at this name today heading into tomorrow. 105,000 total contracts traded today. That's a decent sample size, actually. It's not too bad. I always like to see more volume than less volume, but 105,000, not too bad. 54,763 of those are calls. 50,373 of those are puts. So a relatively evenly weighted, just slightly bullish overall chain, overall call per ratio here today. Now this is really interesting. Look at this. The delta range between 0 and 20, that is going to be the short-term speculation, right? Those are those out-of-the-money, gambly style, cheapy contracts that are typically very short-dated. By definition, the short-term speculators there. Look at this, so evenly weighted. 17,800 puts, 18,030 calls. Almost 50-50, getting very close, but just barely weighted bullish. So that's really interesting. Almost a perfectly evenly weighted chain, but just leaning slightly to the bullish side, both from an overall call per ratio perspective and just barely that short-term speculation perspective. Hey, listen, if you get value out of these videos or you just like save stock, hope to see you subscribe to the channel, and I'll see you in the next one.